Welcome back to our website. This segment is about self-directing your RRSPs and TFSAs for those who want to invest in the MIC. So, of course, this presentation is educational in nature. It is not a solicitation for securities, nor anything presented here is it to be construed as advice. Everything presented here is done so with the best due diligence and care possible. That being said, it is a presentation, not a legal document, and so there may be typos or other errors that exist in the presentation, and so it should not be relied upon for any investment decision. Of course, seek the advice of an accountant, lawyer, or other professional in any investment decision. I'm Rene Gauthier, and I'm an entrepreneur, and this is me. So let's start off right away with registered funds. You have your RRSPs, your RIFs, your RESPs, and your TFSAs. The government brought them in so that individuals can put together their own retirement plan for when they retire. And the beauty about these plans is that you're putting money aside and then leveraging it by investing these funds into interest-bearing accounts that pay you over time, 40, 50 years. So you have, if you put in $1,000, you have several $1,000s at the end. So, what is self-directing? Well, it's where you move funds from one plan to another eligible vehicle. Most people just put their money into the bank. They don't know what kind of returns they get. I've done many seminars and asked the people, and usually, how many of you put your money into an RRSP and known what the return is? And quite often, those people that do know, it's paying them 0.5% or 0.25% per year, or it's even losing 5 or 10% per year. And the truth is that a lot of these vehicles that the banks put your money into do pay decent returns, but after the commissions for the banks and the managers of these funds, there isn't anything left for the investor. So, what are the benefits of self-directing? Well, you then take control of your money. It is your money. It is your retirement. It is so important. You have to be responsible for it, just as I have to be responsible for mine. It gives you the freedom of choice. It's not what pays the biggest commission to the banker sitting behind the desk. And the returns grow inside the vehicle. So let's say if it's a TFSA, all that interest is tax-free. So if you earn $1 outside of your TFSA, almost half of it goes to the government. But inside the TFSA, you get your dollar. It is your money. So, who are the players? Well, Western Pacific Trust Company is the company that we use in order to manage your RRSPs, TFSAs. What happens is they just have an agreement with us that if people want to put it in their investment in with us, they will make sure it happens. Our mix, TIB, is one of them. We accept the money. And then, of course, there's the TFSA business models. There are several rules that allow you to make money inside of your TFSA tax-free. Remember, for every dollar you put inside a TFSA, it's like earning $1.50 outside of it. Western Pacific Trust is authorized and registered to do business in BC and Alberta as a trust company. In other words, they have to follow the Trustee Act to ensure your money is well taken care of. They cannot hold the funds that are on deposit. All that they can do with the money is it comes in and they have to right away place it in one of many investments that qualify under Section 141 of the Financial Institutions Act. In September 1, 1999, the shares of Western Pacific Trust company. We're listed on the TSX Venture Exchange under the trading symbol WP. In other words, they're a public company. They're scrutinized by the Securities Commission, by everyone, and they provide specialized estate and related tax planning services. Self-administered RRSPs in Lira to permit investors the tax-deferred benefits of a registered plan while maintaining control over their investment choices. Like I said, you have control. You have the con. Process. All you have to do is fill out the Know Your Client form, anti-laundering rules, etc. Make it very important that any money that goes in to this trust is clean money. Additionally, they need a copy of your ID. They have to know that they're dealing with a real person. And a void check. You will also have to pay them $150, which is a very small amount, in order to manage the whole thing. Information disclosure gives WPTC authorization to talk to us about your accounts. In other words, you sign a form so that they can tell us about the money that's coming in. And then the process, all that happens is that you put it in your application and it clarifies where things are going, tells you what to do step by step. And we're there the whole time to help you along. It also tells us what kind of plan it is and who the beneficiary is. So if something were to happen prior to your retirement, there's something to do with the money. It'll go to whomever. You can be your own beneficiary or somebody else. And also a statement confirming you know what you're doing. You have to be competent in order to invest. There's all kinds of terms and conditions and a lengthy legal dissertation. That is for your protection. Like I said, when you go to the bank, all of these things are still there. They just kind of glean through it. In this case, we really want you to actually read it and know what you're getting involved in, because we think what we have is very fair, very lucrative for you, and helps create a retirement plan that you can live on. So the process. Well, first of all, you've already done the application. You've already said that you're competent. Now what we have to do is transfer the funds from wherever your RRSPs are into the other institution. And it's just an application form. You've already given a void check. You've already given a check for Western Pacific Trust. There is an annual administration fee. And if you hold a minimum balance of $500 in your account, it's free. So this is considered an RRSP contribution and a tax receipt is issued. So in other words, you save money. Once Western Pacific has approved you, you get a plan number. Then you send the transfer authorization, and then what happens is your bank transfers the money to the trust, and the trust sends it to wherever you tell them to send it. Once the money has come in, or a share certificate, then what happens is there's a few forms required for you to tell them exactly where you want it, and then that's it. Step 2. Once you have that in, you do have to sign a subscription agreement from us to Western Pacific Trust. There's a private company purchase fee of $75 plus tax, because the private corporation is a company that issues shares that are not publicly traded. You get a contribution tax receipt, and you must let WPTC know that's where you want the funds to go. That is all that is required to move the money into the MIC. So once the funds come to us, we sign a form saying yes, we accept the money, and we give them shares for their money. A letter of opinion from a lawyer or accountant just to confirm that the MIC is an eligible investment for your RRSP or TFSA. Sometimes it will go through an EMD, exempt market dealer rules, and just to let you know, everything will be double checked to make sure that everything is in compliance with all the regulations and rules, from the Income Tax Act, the Trustee Act, to the Securities Act, to the Corporations Act. And that's pretty much it. So, this was a little bit longer segment. I hope you enjoyed it, and talk to you soon.